It's really decision time for Bitcoin now, as you can see. We've been accumulating at this point, at this range over here. We've been accumulating and accumulating and accumulating. And now it's really decision time, because if you look at where Bitcoin is, it's gone here and it's tested the lows over here. So it's tested this level over here. And eventually, after we've had 1, 2, 3, 4 times that it's hit that level, eventually it could go down, or you've got the same line above here where you can see that Bitcoin's been testing that line. So it's a bit of a skew line, but I'm sitting here in a hotel room. And then what's going to happen is you're going to get Bitcoin either going up or down. So today we're going to talk about whether Bitcoin is going up or down. Now, even if Bitcoin goes up, it's probably just a relief rally. And the relief rally is a relief rally in what is for sure now a bear market. And so today what we're going to talk about is there is some good news and some bad news about this bear market. So I'm going to show you the good news. I'm going to show you the bad news. I'm going to show you why a relief rally is probably imminent, but it's just a relief rally. And then I'm going to show you why this bear market is probably the most important time of your lives. Now, it's not our normal setup. As you can see, I'm in a hotel room. I'm in the south of France, and I couldn't get Wi-Fi, but I decided to find Wi-Fi and actually make this happen for you guys instead of just wasting a good show. So if you're here, subscribe to the channel, like this content, and let's do this, guys. Yeah, I'll tell you for sure, no one's going to ever floor me on work ethic. Here I am in the south of France, and I'm bringing you crypto love, and I'm bringing you crypto wisdom, and I'm bringing you stuff that I had to talk to you guys about today, because I figured if I don't talk to you guys about it today, it's going to be old news. So if you're here, do me a big favor. Smash that like button. I need you guys to help me tell the Banter fan that we're actually live. We haven't been live. We were supposed to go live at our normal time, and we didn't get to go live because I couldn't find Wi-Fi. So I have got Wi-Fi now. It's, as you can see, I've got lights and spotlights all over my face, and bedroom lamps. In fact, if you go to Twitter after the show, I'll show you what the setup actually looks like. I think you guys will have the laugh of your lives. All right, so do me a favor, smash that like button. Jimmy, it would be nice if we get some comments on the screen. Let's get some comments on the screen. If I see Paula's logging in and out, we've got Jimmy at home helping us here today. Let's do this, fam. I'll tell you why it's such an important day. It's an important day because Bitcoin is, as Sheldon would say, has been accumulating. And it's accumulating in a very dangerous range. Okay, so it's a very dangerous range. And the reason is you can see that we've been here to about 31,000, 31,500. We've tried to break out of that multiple times. 1, 2, 3, 4. One time we got out, but we came straight back in. And then we went on the way down, and we tested it once, twice, 3 times, 4 times on the way down. And eventually, you know what's going to happen. If you keep testing a certain level, be it support or resistance, eventually what's going to happen is it's going to break one way or the other. Now, it feels to me like we may break up. And I'll tell you why I think we may break up. I'll show you all the givens. So the first part of why we may break up is if you look at the NASDAQ. The NASDAQ has been absolutely destroyed, not only in April. If you remember, April was one of the worst months that the NASDAQ had seen. In fact, let's just quickly go and do some very basic numbers. So that is April. And let's take that until the 1st of May. So somewhere around here. There we go. I think it was somewhere around there. So in April, the NASDAQ was down about 14%. In May, it's down another 10%. So the NASDAQ has been getting hammered. And today, what you've got is like the first day where you got the NASDAQ, and the NASDAQ kind of seems like it's calm. It's not. It hasn't been hit. It's the first time that the NASDAQ hasn't been hit. Yesterday, we had Snapchat's earnings. Snapchat's earnings obliterated. I mean, I don't know if you guys saw the NASDAQ yesterday on Snapchat's earnings, and it just put everybody in this fear that we may be getting into a recession, and that's why the NASDAQ went all the way down again. Bitcoin, I mean, if you look at the weekly, let's quickly look at the weekly on Bitcoin. You had, I think, 7 down weeks in a row, which is something that we haven't, or 8 down weeks in a row. We'll count that together. Let's quickly count the down weeks. So we've got 1, 2, 3, 4, 5, 6, 7. We've got 8, and now we're in the 9th week. So the question is, we've got the 9th week. Everyone's talking about the Fed minutes. The Fed minutes are coming out today, or they might actually even be out. They'll be out in a couple of minutes. Obviously, I haven't seen them, but I'm assuming that there's no surprises in the Fed minutes. If there are, we will see that over here. We'll see it in the NASDAQ, because the NASDAQ chart will definitely respond to what's coming out in the minutes. And right now, the NASDAQ is pretty stable. So that's what it is. Now, there are a few things that show us that we may be getting a relief rally. The first thing is you've had 9 down weeks in Bitcoin. After 9 down weeks, we could kind of expect one good week. We deserve a pump. You can almost say we deserve a pump. Doesn't mean we're going to get it, but it does mean that we absolutely deserve it. The next thing that we may see is the NASDAQ, the same thing. The NASDAQ has been going down and down and down. And at some point, there's going to be a relief rally, and we're able to get some kind of pump out of that relief rally. We're seeing it in the other indicators. So there's a whole lot of other indicators. You look at the dollar index. Remember the dollar index, which was running away and peaked at 105. And remember, a strong dollar is very bad for us. Well, now the dollar index is back at 102. And yesterday, it actually touched 101.66, which is great. It means that the dollar is getting weaker. It means that things relative to the dollar will become more expensive. Things relative to the dollar being stocks, Bitcoin, other assets. Then you've got the 10-year Treasury yield. When the 10-year Treasury yield moves down, it means that the market has done the Fed's job, or the Fed has done its job in the markets. And so what you can see here is that even the peak of the 10-year Treasury yield was 3.2%. And now we are back down at 2.7%. And you can see that, again, it kind of feels like it doesn't feel like we have broken a trend here. We had a trend that was something like that, and we broke that trend to the downside. And it looks like now we're starting to come down on the 10-year Treasury yield, which kind of means that we may be in territory where we may see some kind of relief rally. Hopefully, maybe, we may see that relief rally on Friday or just before Friday. So tomorrow or maybe early Friday morning. The reason is we have an options expiry. It's the end of the month option expiry. So it's a big options expiry. On Deribit, it has a notional value about $2 billion. And the max paying price is about 34,000. So we may be able to get a relief rally here. I don't know if we will, but if you're looking for hopium, there is hopium that, there's the options closeout. Also, if you look at Plan C, and I must say I'm loving Plan C's content. Initially, I thought he was a real, a real rip-off account of Plan B. But if you actually read his content is actually very, very good. It's very, very high-quality content. What he says here, for the fourth time in Bitcoin's history, it appears that the metric might have already bottomed out on the reversing. The last 3 times it occurred, it left the massive green zone and we got a massive pump. And he's talking about the supply last active, so the 1 year plus supply last active. And you can see that every time that this indicator's turned, it's been followed by a bull run, or some kind of pump. I'm not going to say bull run, I'm going to say pump potentially in a bear market. Okay, Jurian Timmer, he is from Fidelity, and actually he's joining us on Friday. We're having a big banter this Friday. We've got Raul Paul, we've got Dan Tapiero, and we've got Jurian Trimmer from Fidelity, all joining us on Friday for the Friday banter. But what he's saying is, if you look at the market sentiment, he's saying the sentiment is now talking about some kind of relief bounce. And he's saying that this is a very interesting one. He's saying that the insider buying and selling, you've had a spike in insider buying or selling. And the insiders, or what they call the insiders, are usually the first people that actually start buying. You also got the put-call ratio at the lowest since March, which means that retail has left the building and that we may start going around. Then we've got the fear and greed index on traditional markets. And the fear and greed index is now at a low and indicating for a relief rally that's probably imminent. But regardless of whether it's imminent or not, it's just a relief rally. It's not more than a relief rally, because this bear market that we have isn't going to end this week or next week. We're not miraculously now going to see a pump and then the bear market's going to end. We need to get into that mindset, because if you trade with the wrong mindset, you're going to get wiped out. And now the mindset is that we are going into a bear cycle. Now, the good news is that we've been here before. I've been here for 2 very, very, very vicious bear cycles. I was here 2015 leading up to 2016, and I was here in 2019 and 2020. And so I've made some mistakes, and I can share those mistakes, and I can share with you guys how best to navigate those things. But you need to understand that right now the Fed has a job to do. And the Fed is quite serious about its job. And the job is to reduce inflation at all costs. Everybody wants the Fed to reduce inflation at all costs, or most people want them the Fed to reduce. Now, what you can see here, this is quite interesting. Every time that the S&P has had big drawbacks, the Fed has bailed us out. Okay, so here we had a drawback, Fed bailed us out. Here, bailout. Here, bailout. Here, bailout. By the way, these are years. So this is 2008, this is 2011, 12, this is 2017. Every single time that we've had these dips, the Fed has bailed us out. This is the first time where we are not only being not bailed out, but actually the Fed is doing the opposite. And they're doing it because to them, reducing inflation is actually more important than keeping asset prices up. To be honest, and we've got to face this reality, the Fed does not give a shit about the markets. The Fed less so does not give a shit about the crypto markets. The Fed cares about middle America. The Fed cares about lower America. The Fed cares about nipping inflation in the bud. And what that means is that the Fed is going to do what looks like we are already in recession. Yesterday, the housing numbers came out, and what we realized is that the housing numbers are bad, very, very bad. No one's buying houses anymore. That's a very, very, very bad sign. New home sales were 591,000, and they expected 750,000, which means there's a drop of 25% in new home sales. People can't afford homes anymore because the mortgage rate is going up and because everything is becoming way too expensive. So now, for the first time in a long time, the Fed, a member of the Fed, his name is Bostic, Rafael Bostic, came out yesterday. What does he say? He, for the first time, starts talking about the Fed may be slowing down. He says, hold on a second. I mean, I'll get you a better example of what he said. He said he would like to pause further rate hike at the Fed's September meeting to allow time to assess the impact of a tighter policy on economy and inflation. So it's the first time that anybody from the Fed has come out and actually said, okay, whoa. We may be going a bit too aggressive. Let's do a 50 basis point in June. Let's do a 50 basis point in July. But in September, let's wait. In September, let's just see what happens. And it's the first time that anybody from the Fed has actually come out and said that. That's huge. That shows that already the Fed is realizing that they may cause a recession. They don't want a recession. They just want to get inflation under control. And as I said, exactly, Lindy says it right. People are really starting to struggle financially. And that's a byproduct of inflation. So we've got a double whammy because we're considered the upper end of the spectrum. When you're at the upper end of the spectrum, your investments are going down and the prices of the stuff you want are going up because of inflation. And that's a double whammy. Most people don't have investments. Most people live from hand to mouth. And for them, all they feel is that prices are going up. And that's the majority of the world. And that's the part that the US government wants to actually protect. So that is what the Fed's going to do. And for the first time, Bostic comes out yesterday and he says, hold on, we may slow down. And believe it or not, the hedge fund community go absolutely ballistic. Bill Ackman says inflation is out of control. Inflation expectations are getting out of control. Markets are imploding because investors aren't confident that the Federal Reserve will stop inflation. The markets are not confident because they scared the Federal Reserve is not going to be able to stop inflation. If the Fed doesn't do its job, the markets will do the Fed's job. It is what it is. And it's happening right now. The only way to stop this raging inflation is with aggressive monetary tightening policy. With today's unprecedented job, we've got a very strong jobs market, and you've got everything going on. The market needs to come down. And so what he's saying here, in the last day or so, various comments from current and former Fed have waffled and made dovish remarks, bullish remarks, proposing a modest increase in rates and a pause in the fall. The Fed has already lost credibility, and he's saying that right now the Fed is going to start losing credibility. I didn't think that we'd see a point where people are actually complaining, hedge fund managers are complaining that the market's actually crashing. That's where we are today, just to give you guys some kind of perspective. So that's where we're at. And it's going to be a long bear market. By long, I mean probably 6 months, maybe even more than 6 months in terms of a bear market. Now, there's good news and bad news in this bear market. There's good news and bad news in the bear market. The good news is that if you position your portfolio correctly in a bear market, you will make life-changing money, millions and millions of dollars, depending on how you invest. But there's some bad news, and we'll talk about the bad news in a second. The main thing, though, is that if you want to think like a big investor, you've got to act like a big investor. If you want to be like a big investor, you've got to think and act like a big investor. And there's the old adage that says you got to buy when others are fearful, and you got to sell when others are greedy. And never before has that been more true. Because if you think about, let me get this chart back for us. If you think about the markets and you think about where we've been in the markets, imagine let's just have a look at where we are. So this is the bull market of 2020, 2021. Now, if you would have bought over here when everybody was very, very, very fearful, you would have been able to sell over here. Most people only came in somewhere over here and tried to make money. And you see where those guys are. But the people that bought over here were the ones that actually made money. So that is how you guys have got to think. And the very basics of how to think like that is just looking at fear and greed. And if we look at fear and greed, okay, that's where fear and greed is. Fear and greed is around 10. Look where fear and greed is. Today, fear and greed's at 11. Yesterday, 12. Last week, 12. Last month, 23. We are in extreme fear, and we've been in extreme fear for long periods of time. And that is probably the easiest trade in the whole wide world. Because if you look at the easiest trade in the whole wide world, every time that fear and greed is on red, every single time, it is followed by green. You see, every time. So it's not like sometimes yes, sometimes no. Every time that there is red, it is then followed by green. It's been happening since the beginning of time, and it's going to continue to happen. Right now, we are red. We're in a period of long red. Look what happens after a period of long red. Look, period of long red, green. Period of long red, green. Period of long red, green. Happens every single time. I know you're going to try and convince yourself that this time is different and that this time it's the only time that the Fed hasn't been putting money into the economy. I'll remind you that when we were sitting here and we were talking about COVID, that was going to be the end of the world. The markets were never going to recover from COVID. The markets recovered from COVID. And you know, the truth is that the most basic of trades, of buying fear and selling greed, is just to trade on the fear and greed index. So what if, this is a what if. What if you looked at the fear and greed index and you said, okay, listen, when there is high fear, I buy, and when there is when it goes green, it goes to greed, I'll sell. So someone actually did that thesis for us. And what he said is, yeah, I'll make this slightly bigger so we can all see it, especially me. So what he says here, he says, obviously, fear and greed index. So he talks about the fear and greed index, but then he goes in and he says, what's fascinating about the fear and greed index is how little it drops below 10 for Bitcoin. So in 2017, we got 24 days, and then hardly ever does the fear and greed index drop below 10. But what happens if you actually bought it every time it was at 10 or below 10? So it's very simple. If you did it, you would make quick returns. What he means by quick returns, he says, if you just sold it very quickly. In other words, when it got back to 35, so when it went from 10 to 35, you would have made 133.4% cumulative. If you would have waited for it to go back to 50, you would have made 122%. And if you would have waited, you would have lost your returns. He's saying, look, even if you don't want to think like a big VC, the only thing that you should be doing is trading the fear and greed index. And right now, when I look at the fear and greed index, what is it telling me? It's telling me that we've been down here for a long time. Let's go to the 3 months just so you can get a view. Let's go to the 1 year. Look where it is. Eventually, the fear and greed index always turns. It always does. There hasn't been a time in history when it hasn't turned. And when it does turn, it takes up the markets with it. So you've got to be able to survive, and you've got to be able to stay in this game. You've got to start thinking like a big investor. Big investors love bear markets. They love bear markets because they know that in a bear market, they're buying things cheap. They're buying the same things that were costing them $69,420 with Bitcoin at its all-time high. The same Bitcoin, they can now buy $30,000. Okay? The deals that were being valued at $50 million on the VC market or on the crypto markets are now going for $10 and $20 million because the hype is gone, the retail is gone. The people that were willing to put stupid valuations on things are gone. And so if you look at what the VCs are doing right now in the peak of the bear market, the peak of the bear market, Andreessen Horowitz has raised $4.5 billion in a crypto fund. That's the biggest crypto fund in the world by far. When did Andreessen Horowitz raise it? In a bear market. Because the smart investors know that this is the time to be investing. If you would have put your money in earlier, you would have been buying the bull market. We all bought the bull market. Now, if you want to think like the big people, the big funds are raising $4.5 billion to take advantage. And that's after an announcement that they made a week ago, sorry, where they said that they're raising a fund for NFT games, $600 million to build the future of the industry. These guys ain't stopping. For them, a bull market or a bear market is much better for them than a bull market. Much better for them. They're not the only one. Alan Howard, he's a fund manager. He's got $1 billion crypto operation. It's not a coincidence that all of these things are coming out now. It's not a coincidence, because the smart money, the money that's been there before, knows exactly how to make money. And how you make money is very simple. You get into markets in the bear market when everyone is shitting themselves, and you get out at the top, or you hold for so long. That's what it is. It really is as simple as that. So now, as I said to you, there's good news and bad news. Let's talk about the good news. The good news is the bull market is going to come back. That's good news. The other good news is that the same deals that you were willing to pay 5 times the price for, today you can get those deals for 1/5 of the price for. Great news. The good news is that if you're here now, you're not buying at the top. That's for sure. You're going to be going down. You're going to be buying somewhere near the bottom. Maybe it's not the bottom, but you're definitely going to be buying somewhere near the bottom. So that's the good news. But then I've got bad news for you guys as well. Very serious bad news. Something that to me is very depressing. To me is very, very, very depressing. The bad news is that we're going to get another bull market. We're definitely getting another bull market. But the bad news is that the next bull market is not going to be like the last one. It's going to be way smaller. It's going to be way harder to make money in the next bull market. Let me show you why. It's very, very simple maths. So if you look at the first bull market, let's take the first bull market from the bottom of 2015. Bitcoin was trading at $109. Okay, $109. Bitcoin then went to $20,000. So the market went up 200x. So Bitcoin went from $100 to $20,000. It's a 200x return on Bitcoin. That was the first bull market, okay? The second bull market, Bitcoin went from 3,000 to 65,000. That's 20x. So the first bull market was a 200x bull market. And the next bull market, because the market was way bigger, was only a 20x. So 200x was the first bull market, 20x was the second bull market. Same thing goes for altcoins. For altcoins, it's fucking wild, okay? So let me show you how wild it is for altcoins. To be fair, I'm not going to take the bottom, because the bottom was when altcoins had a market cap of $3 million. But let's not take that. Let's take when altcoins had a market cap of $30 million. In the first bull market, that $30 million became $506 billion. Okay, I can't even do the maths for how many times. I think it's a 200x. Okay, it's a 200x. Hold on, let me just kill my phone. I see my wife's calling. So, let me just switch that off. Give me a second. Let me switch that off for you guys so it doesn't disturb us again. Okay, okay. So let's quickly go there. Hold on, let me just get a screen for us. Okay, so so what you can see here is you can see that the first bull market was a 200x. The next bull market was a 20x. Okay, with altcoins it was exactly the same. It was a 200x the first bull market, and the second bull market was a 20x. You see that? So the good news is that we're going to get another bull market. The bad news is that the next bull market is going to be much harder than the last bull market. It's going to be much harder than the last bull market. It's going to be much harder to make money. It's not going to be that easy to make money. It's a different kind of game. So I love this, because to me this is like, the whole Squid Games. It's a different game. It's a game that you don't know the rules to. It's a game that you got to prepare yourself for. And if you get it wrong, well, then you're going to be eliminated, like all the other players. So you got to make sure that you stay alive and that you don't get eliminated, because it's going to be very, very, very simple to be eliminated in this next bull run. So you got to make sure that you don't get eliminated. The main thing that you have to do is you have to survive. And then once you survive, the main thing, survive. And then you've got to apply a whole lot of other things, which I spoke about yesterday in a tweet. And if you apply these things, you will survive the bear market and you'll come out very, very, very wealthy on the other side. If you don't, you will probably get wiped out. Chances are you'll probably get wiped out. So you got to be careful. You got to make sure that you survive. Everything you do is now about survival, because if not, it's exactly this. It's a game of Squid Games. You will be eliminated. You will make a stupid mistake. You will lean forward. You will fall back. You'll make a stupid mistake. And what will then happen is you will be eliminated. And then we can't have fun with you in the next bull market. So you got to make sure that you change your strategy. You need to make sure that you change your strategy, that you learn how to play this game, okay? Because if not, then the end is near. And I can tell you the truth. There's a lot of people that I know that Luna wiped them out. A lot of people had too much money in Luna. Luna wiped them out. They were eliminated. You got to make sure that you're not eliminated. And if you don't want to be eliminated, then you got to follow some very, very, very simple rules that I learned over 2 bear markets. And that's what I want to talk to you about today. So that's why I said, I've got to jump on a stream and I've got to talk to you guys about this because, as someone who survived 2, I ignored my wife's calls, I'm going to definitely get eliminated. But as someone who survived 2 bear markets, I learned a few things. And the main thing that I learned is that you have to be patient. Because if you try and rush a bear market, you'll be eliminated. You will be wiped out quicker than you know. You cannot fight the tide. If there is a tide, you cannot fight this tide. You cannot fight fight the tide. So let's also just talk about what else you need to do to survive. So I think the first thing is prepare yourself mentally for a marathon. This is not going to be a short bear market. It's not going to be another month or 2 months. It's going to be much longer than that. You have to prepare yourself to survive. That means, 1, you got to have dry powder. You got to have some cash on the side to be able to fight. The good news is that the longer the bear market goes, the more time you have to accumulate cheap coins. The quicker the bear market goes, the less time you have. Now, I don't know about you, but Luna wiped me out for a little bit. I need some time to get my portfolio back on its feet. I need to generate some more cash to get my portfolio back on its feet. Okay, so 1, get yourselves into a mindset that this is a marathon. It's going to be a tough road ahead. You can tap out now, or you can join the marathon with us. The next thing is, in a bull market, it's super fun to look at the screen. Every time you make a purchase decision, or every time that you decide that you want to buy something, the price goes up, you think to yourself, fuck, I'm a genius. I called it right. And that releases dopamine and makes you happy and makes you feel more confident. The bear market's different though. Problem is, in a bear market, if you're looking at prices too much, you eventually, one day, they'll get the better of you. Either you'll try and trade a fake pump because you think you're missing the run to the bull market, and the run to the bull market is not going to happen anytime soon. Or you're going to panic because you're going to see a spike on the way down. You're going to go, oh my God, this is going to zero, and you're going to sell. Just step away from your computers. Looking at prices in a bull market is fun. Looking at prices in the bear market is suicide. If you don't want to be eliminated, if you don't want to have this doll eliminate you, well, then what you need to do is you need to spend less time checking the prices. Trust me on this. I almost had a couple of situations where the NASDAQ went down. I had a long position in the NASDAQ and I almost sold. Lucky I didn't sell because then the NASDAQ turned. But in that minute of looking at the prices too often, I nearly made a stupid mistake. Place your bets, fundamental bets, good bets, and then step away from the computer. Go on holiday, come to south of France, let's hang out together. But step away from the computer, do other shit. Stop looking at prices because prices are going to make you do stupid things. You don't want to be doing stupid things. Next is focus on the fundamentals. This is not a time to be listening to noise. This is not a time to be looking for gambles. Okay, that's bull market time. Now, all we do is we focus on the fundamentals. That's all we do. We focus on fundamentals. We look for the narratives that we like. If you like NFTs, then let's do NFTs. If you like DeFi, then do DeFi. If you like layer ones, then do layer ones. If you like layer twos, then do layer twos. Pick your narratives and keep investing. Because if these projects are funded enough and they are shipping code and they're shipping product and they come out this bull market, out the bear market, chances are those are the projects that are going to make you 10x or 100x or 1000x. Pick your narratives and keep dollar cost averaging, because now you have the highest chance of doing a 10x or a 1000x. So that's what you need to look like. The bear market is also time to be brutally honest with yourself. If a project isn't well funded, or isn't shipping product, or isn't being used, cut your emotional connection to the project, move the hell out of it, and do it as soon as possible. You know what my biggest problem was with Luna? I didn't move fast enough. I knew I wanted to move some of my Luna to Solana and to NEAR and to other protocols, but I didn't do it fast enough. Do it today, because when things fall over, they fall over quickly. Okay? So do it today. Move out of it today. Okay, next thing. Don't get wiped out by a silly fucking mistake. When I say don't get wiped out by a mistake, you've made it this far. You survived Luna. Your portfolio got smashed. You've learned so much. You're now doing it responsibly. You're dollar cost averaging into the best tokens with product that are shipping all the time and are growing all the time. The last thing that you want, the last thing that you can afford to do is to get eliminated like this. Okay, the last thing that you can afford is to get eliminated like this. Wait, let's find a way to get eliminated here. Okay, so the last thing that you can afford is to get eliminated with a stupid mistake. Okay, you cannot make stupid mistakes now. What do I mean by not making stupid mistakes? Keep your key safe. Get two-factor authentication on exchanges. Don't keep too much money on exchanges, because if you do and the exchange gets hacked, you may get wiped out. Be safe. I keep telling you guys to use a VPN. Use a VPN so that you're not going to lose your money in some kind of stupid hack, or because some exchange doesn't like where you're from. There's a link below to Unstoppable to NordVPN. Use the NordVPN link. It'll cost you $3 a month to secure your crypto. Don't be an idiot. Don't survive the bear market. Don't survive the entire bear market. You got all this far, and now you're going to get ruined because you made a stupid mistake. Keep your key safe. Get two-factor authentication on your exchanges. Get your money off exchanges onto hardware wallets. And then get yourself a VPN. Trust me on the VPN thing. It's probably the easiest way to protect your crypto is not to give hackers access to your computer. The easiest way to do that is get a VPN. There's a link below. Use the NordVPN link. Trust me, you're paying $3 a month. Don't get eliminated because of something stupid. Don't get wiped out because you did something stupid. You got this far. Don't get wiped out. All right, next thing, super important. You got to block up. You got to get out of Twitter. Get out of Twitter. Stop reading Twitter. And I'll tell you why. Because Twitter is a echo chamber for mainstream adoption. For mainstream noise. You've got to get out of Twitter. The more you look at Twitter, the more you get your advice from Twitter, the more of an echo chamber that you build for yourself. Okay, so you got to get out of Twitter, and I'll show you what I mean. This was an interview that was done yesterday with Ray Dalio around Bitcoin. So just listen to this interview. I'm going to leave it on for you guys for a second. Listen to this interview and tell me what you guys heard. Hold on, let me get this interview playing for you guys.
One of the things that you and I have talked about a lot over the years is cryptocurrencies and Bitcoin. And in the past year or two, it felt to me that you had shifted your view about them a little bit and actually got excited to think that maybe Bitcoin and others could get interesting. And I'm curious how you think about that now in terms of whether that's actually an inflation hedge or maybe it isn't.
No, I think, let me clarify again, because some people make stereotypical. I think blockchain's great. But let's call it a digital gold.
Right.
I think a digital gold, which would be a Bitcoin type of thing, is something that probably, in the interest of diversification and finding an alternative to gold, has a little spot relative to gold and then relative to other assets. But I think that we're in an environment that we're now going to ask, what is the new money? Okay, so meaning fiat currencies. And when we look at currencies, you hold currencies in the form of a debt,
Right.
And so when I say cash is trash, what I mean is that all currencies, in relationship to the euro, in relationship to the yen, all of those currencies, like in the 1930s,
right,
will be currencies that will go down in relationships to goods and services. And we are in an environment where we're going to be looking at what are those assets? What is the type of money that you can move between countries that's a medium of exchange and a storehold of wealth? And that's what I'm talking about. And I'm saying that Bitcoin has made a tremendous achievement over the last 11 years of being able to. It's a tiny percentage of my portfolio. I think the Bitcoin people get too preoccupied with it. The gold bugs get too preoccupied with it. And I think you have to look at the broader set of assets that serve that purpose.
Okay, so we all heard the same interview. He's excited about Bitcoin, you could say, but for him, it's not about Bitcoin. For him, it's about something else that changes the monetary thing. And I think he pretty much clearly said that it's not about Bitcoin. Let me show you what the problem is. The problem is billionaire investor Ray Dalio has once again affirmed his belief in Bitcoin and other digital assets. Okay, so now you're seeing how Twitter has now become this echo chamber for positivity, but that's not what he said. Carl the Moon, Bitcoin hedge fund manager Ray Dalio says his portfolio still contains Bitcoin. Fire, fire, fire. Okay, that's not exactly how it came across. And that's the problem. The problem is that if you live on Twitter and if you use that as your echo chamber, the problem is that you start believing what everybody's saying. And then when you start believing what everybody's saying, you can't really see the truth of what's happening. So now's the time to clean up your Twitter feed. Spend less time in the echo chamber. Clean up your Twitter feed. And the main thing is that if we learned anything, we should start listening to smart people who have alternative views. So Algod Trading. Algod Trading is the guy that took the bet against Luna with Do Kwon. Remember that guy? His name is Algod Trading. Anyway, Algod Trading says, Bored Ape Yacht Club holders about to realize it's just a stupid monkey picture. He says it'll never reach its all-time high again. Instead of selling a monkey picture for a house, they decided to hold it because of much online identity, peak stupidness, up for a size bet with a Bored Ape Yacht Club and punk holder. Okay, in the bear market, you're seeing that all the realities are coming through and all the bullshit hype of about an ape profile picture that's worth millions of dollars, people are not questioning that. That's what you should be listening to. That's what you should be listening to. Because if you get into this echo chamber, you'll start convincing yourself of things that aren't really happening. And the problem is that once you get into that, you're not going to be able to get out of it. So you're going to start looking for different opinions. And what I said in my tweet is I said that the best way to do it, and I'm currently doing this right now. You'll notice that the people that I follow on Twitter are becoming less and less. Why? Because I'm cleaning up. I'm cleaning up my Twitter. I'm cleaning up my YouTube feed. I don't need another person telling me how good the new Luna is or how good Phantom is. I need people going to tell that are going to give me opposite or alternative or different advice. And so what I'm doing now is I'm proactively cleaning up my Twitter feed. I'm proactively cleaning up my YouTube feed so that I don't get this echo chamber in crypto. Because in the bull market, it's cool. In the bull market, you want to be trading on sentiment, right? Because good sentiment usually drives prices in the bull market. In the bear market, it actually distracts you. So you know what your Twitter feeds look like. You know who are the good YouTubers, who are the good Twitter guys, who are the good medium guys. The rest, say bye-bye to, because they're just going to make you lose money. They're just going to give you bad trades with their hopium. That is what you're going to be looking at. All right, next thing. Let's look at a couple more things. And we're almost done. Use this time to learn as much as you can. You got as much time as you want to learn without hype and without FOMO. You can go into depth with certain things. And use this time to go into depth to learn. Find your niche. If it's NFTs, let it be NFTs. If it's gaming, let it be gaming. If it's DeFi, let it be DeFi. But find your niche. If it's trading, become a trader. Find your niche and spend time in the bear market without FOMO, learning your niche. So when we get out of it, you have got more skills than anybody else. Right now is the easiest time to learn because there's no FOMO. There's no rush. Before you had no time to learn. Why did you have no time to learn? Because if you did, you'd miss a trade. Okay, so what did you do? You just threw money because everybody else told you to throw money in the echo chamber. Bullshit. Stop, learn, find a niche, even if it's a small niche. Become an expert in that niche. If it's Cardano, let it be Cardano. If it's Solana, let it be Solana. If it's NFTs, let it be NFTs. Whatever it is, find that niche, learn that niche, and then start investing in that niche. Okay, that's what you need to be doing. Don't try and look for the quick bucks. There are no quick bucks in the bear market. Forget it. If you do that, you will blow yourself up. The next thing, is build a diversified portfolio in the bear market. And a diversified portfolio means multiple narratives, NFTs, exchanges, etc., layer ones, layer twos. It also means that you don't overinvest in one layer one protocol. Don't invest in one layer one protocol and the whole ecosystem around it, because if something happens to that layer one, you will get blown up. That's what happened to a lot of people with Luna. They invested in Luna, in Astroport, in Mars. What happened? Luna blew up. Now what are they left with? They left with tokens that are worth nothing on a ghost chain and a new chain that is potentially launching, and we'll talk about that in a couple of seconds. Then look at fully diluted valuations only. When you go to CoinGecko, and let's just quickly take one example. And again, I'm only using this example as because I'm not positive or negative on this example. In fact, I'm a holder of Avalanche. The market cap is $7.5 billion. The fully diluted market cap is $20 billion. You need to look at the fully diluted market cap. And I'll tell you why. Because you don't know how long the bear market's going to last. But rest assured that while the bear market keeps going on, the tokens are getting released into the market. Some of them are being released because VCs are getting their token releases. Some of them are being released because of mining emissions. But either way, it's like you're swimming in a swimming pool. And there's more and more and more water coming in the longer that you wait in the swimming pool. And the problem is that if you don't know, if you're looking at non-fully diluted, as time goes on, you're getting more and more water in the swimming pool. And by the time you look up again, by the time the bear market's over, you drowned in other people's tokens. You got to look at fully diluted valuations only. Everything else is pretty much a scam in this market. You look at, don't listen to what anybody else tells you. When you look at a protocol, you say, am I willing to pay this price for it? And you make sure that that price that we're talking about is the fully diluted price. All right. Next thing, make sure that you buy enough. Bear markets are a gift. And particularly this bear market is a gift. The reason why this bear market is such a gift, because we know for sure there's going to be another bull market afterwards. We know that this bear market is actually caused by macro factors and not by crypto itself. We know that as soon as the macro environment turns, and it will turn because it always turns, because that's just how life works. Markets always turn. Markets always end up eventually going up, even though at the time when there's bear markets, it feels like it's never going to end. When this turns, we're going to get the bull market of our lives. It's not going to be as big as the last one, but it's going to be huge. Now, the last thing that you want is to have been here, to have had all the info, to have known that the bull market's coming, to have studied everything, and not to have bought enough. Remember that this is a gift. The fact that we have a bull market, a bear market now is a gift. Because if we didn't get it, you'd still be buying those tokens at all-time highs, and eventually the market was for sure going to come down. This is a gift. You have to embrace the gift. You have to thank the heavens or whoever you pray to for this gift, and you have to make sure that you buy enough. Make sure that when this bear market's finished, you've got enough. Have a plan so that when the bear market's finished, you've got a plan. And then, of course, remember, this bear market is going to end. Just like every other bear market in the history of the world, this bear market will end. It may take a month, it may take 6 months, it may take 12 months, but it will end. Make sure that when it ends, you have what you need to have. You have the right projects in the right ecosystems. And then what you can do is just go on holiday and watch the prices go up. Then you can sit on your phone and you can watch the prices go up. So that's my bear market survival guide. And I wish I could say to you that the bear market's going to end soon. And I know that that's hopium that everybody's looking for, but it's, we need to face the facts. And it's, I'm not going to sit here and give you hopium. I know that there are other channels that are going, it's going to turn, and it's going to turn, and I saw this, and I saw this. No. Let's just rather focus on making sure that we come out of this bear market and come out of this bear market absolutely alive and absolutely kicking and ready to take over the world when the bull market comes back again. Alrighty, so that is what I wanted to say to you guys. I know that there is a little bit more news. We can maybe touch on it quickly. Terra proposal has been passed. That means that there's a new chain that's coming out on Terra. It's called Terra 2.0, whatever it is. Terra Classic, Terra 2.0. You can see that some people are very much bullish against it, are very much bullish about it. Some people are very negative about it. Look, personally, I'm not really bullish about it. I think that the whole Terra chain was actually based on the fact that there was a UST algorithmically based stablecoin. I think that algorithmically based stablecoin's gone now. And I mean, look, they could build a great chain, but it's not. I mean, Solana is probably going to be a better chain, and Avalanche is probably going to be a better chain. And so I'm not too excited about it. I'm going to hold my tokens because I have to hold my tokens. because anyway, there's a very tight vesting schedule, but I'm not too bullish about it. And I see that some projects are adopting my mindset and some projects are adopting another mindset. So Jose from Delphi, he's saying, look, we don't have strong conviction on Terra V2 at this stage, too many risks, unknowns, and we can't endorse it or encourage people to invest in it, build on it, or use it. So, but the Terra community wants it to continue, so they're gonna take Astroport to that. Kujira jumped the ship, and they are now launching their own blockchain. And you'll see that, like many other, Apollo DAO is becoming part of the Cosmos ecosystem. So all of these projects are actually doing either following the chain or doing what they need to do and joining onto the Cosmos ecosystem. Some of them won't even make it at all. The main thing is, don't trade Terra projects like a degen, because most of them have already had a snapshot. So we've already had the snapshot. Don't go and buy these projects thinking that you're going to maybe get tokens in a new project. The snapshot's already been taken. Don't be that idiot. Don't be that retail investor that buys in after the party and then thinks that they're going to come in and get drunk. It's not going to happen. It's just not going to happen. All right, look, that's it. I'm going to go and have a night out on the town here in Monaco. I will see you guys again on Friday. I'm not going to have a show tomorrow. On Friday, we got a massive, if I tell you a massive banter, just look at the caliber of guests here. Just look at the caliber of guests here. You got Raul Paul. You got Jurin Timmer, who is from Fidelity. I mean, I managed to get a guy from Fidelity on the show for us. And we got Dan Tapiero. You're not going to get bigger banters than that. You're just not going to get bigger banters than that. So I will see you guys again on Friday. Maybe on Friday, what we'll do is we'll do Bybit giveaways. So remember, and Kucoin giveaways. I don't have the lists open in front of me. What I need from you guys is I need you guys to sign up using the Bybit link below and sign up using the Kucoin link below. If you do the Bybit portfolio, we will 10x someone's portfolio on Friday, and we will also 2x or double some 5 people's portfolios, 4 other people's portfolios. And in Kucoin, we will give away $1,000 to random people who have money in their Kucoin account. So we'll just call on a Kucoin account. If you've got money in your Kucoin account, doesn't matter how much, we will give you $1,000. Because we've missed so many, we'll do like 3 or 4. And then lastly, remember, if you take out a NordVPN, not only do you protect your crypto for $3 a month, but you also support the channel. And we really appreciate it when you do that. So do us a favor, do yourselves a favor. It's $3 a month. Get yourselves a NordVPN. Protect your crypto. Don't survive the entire game of Squid Games only to get eliminated because you made a stupid mistake. I will see you guys again tomorrow. Until then, trade well, my friends.